I sold my house recently. Then I got the proceed. Then after that, with my the one that's already inside the stock market, I put it all in one stock.
Whoa.
Just one stock.
What is the stock that has moved the heart of Stephen Lim before?
Just between you and me, SingPost lah. I actually invested nearly about 300,000
in SingPost.
All in SingPost.
So to do a recap, Stephen Lim right, actually sold his HDB flat in early 22 and he put all his proceeds into one single company, and the company is called SingPost. In detail, he bought 450,000 of SingPost shares, and each share he bought it at 65 cents, which means that he would have invested $292,500 in SingPost alone. And just looking at his purchase price of 65 cents, we guess that his purchase date is on the 18th of March 2022. And in one part of the video, he said that the share price went up and then come down. So most likely he hasn't sell the stocks yet. But if he sold on the 6th of May 2022, he would have made some money. But let's assume that he hasn't sold the shares yet. So now the key thing is, of all companies listed in SGX, why did he buy SingPost? So let's hear what he has to say.
I just have confidence for this company because I know that people still need the product,
especially in
e-commerce,
e-commerce
services by the way, and they are also not in Singapore. They are doing globally their trades, their services as well. Because that time, even till now, I don't know what's your view on that I have strong belief on the company. If I'm not a strong believer, right, I will not have thrown about 300,000 inside the SingPost. Am I right?
So in the world investing, I don't think the dangerous scenario is you don't know anything and you put all the money in. I think the most dangerous scenario is you know a bit and then you put all your money in. I think that's quite dangerous. So in other words, in order for us to invest, we have to have a very good knowledge of what the company is doing. So in this case, SingPost. Let's do a very quick elaboration of what SingPost do for a living. So just to let you know that SingPost make money in 3 categories. The first category is logistics, shown over here, and that includes cross-border e-commerce, logistics, freight management, freight forwarding, and so on. So you may realize that all these terms are a bit technical. So if you're not in the logistics arena, you may find it very difficult to understand. And the one category that we are very familiar with is the post and parcel. And lastly, right, they own the property, which is the SingPost Center Mall. So if you look at the slide over here, logistics takes up 67.7%, post and parcel 29%, and the lease is actually property 3.3%. But there is one number that stands out that I'm a bit worried. So if you look at the net income, it says that the net income, which is the company's profit, is 11.4 million. Inside the bracket, there's a number 1.4%. Now this number is called the net margin. So if it's 1.4%, what does it mean? It simply means that if the company has a revenue of $100, deducting all expenses, only $1.40 is left. So to me, I find that this business has very thin margin. So again, is SingPost a good investment? Now, of all the 3 financial statements, let's focus only on one financial statement, which is the profit and loss statement. So let's do a quick recap. What is a profit and loss statement? You must understand what are the key components of the profit and loss statement. Now remember, when a company makes some form of money through sales of their products, services, and so on, is known as revenue. Minus away all the expenses, you end up with 2 numbers. Positive number, the company is profitable. Negative number, the company is running as a loss. Yep. So if you look at the SingPost revenue, it seems good, uptrend, but take note that revenue is vanity and profit is sanity. So let's look at the SingPost profit. Now, unfortunately, SingPost profit is really on the downtrend, and you realize that in between is going up and down. It's a bit erratic. And if you look at the company's net margin, this is a bit worrying for me. So if you look at financial year 2014, the net margin was still quite substantial, 23.38%. Every $100 collected as revenue, they have $23 left after deducting all the expenses. But as the time goes, you realize that the net margin declines significantly to 1.32%. So let's look at Stephen Lim's investment, assuming that he still hold on, right, to all the SingPost stocks to date. He bought his shares at 65 cents. So on the date of this recording, the share price of SingPost is 38 cents, which means that he's sitting at a loss of 27 cents per share. And you take that multiply by 450,000 shares. So that's a paper loss of $121,500. Wow, that's a lot of money. So in terms of percentage decline, it's 41.5%. And in order for Stephen Lim right, to just break even, the share price has to go up by 71%. But again, in order for the share price to go up by 71%, the earnings has to go up by 71%. So it looks a bit difficult for now. So let's do a quick summary about SingPost. For the past 10 years, revenue is increasing, looks good, but unfortunately the profit is decreasing as well as the net margin is decreasing. So these are the two red flags. So again, I would like to hear from you. What are your thoughts about SingPost? Would you consider investing in SingPost? So I hope that Steven Lim Kor Kor, right, will eventually recover back some of his paper loss.